Hey everybody, it is Chris Kennedy with Reliant Lending, and I just wanted to answer that big question: is what is your best rate? So I'm going to start off with what it actually means, what an interest rate is. So in determining your interest rate, the first thing and the biggest thing is going to be credit. Now, credit is based on a 20-point bucket, meaning that every 20 points is a different interest rate. So let's say you're starting at a 660, the interest rate between a 660 and a 680 is the exact same. And then once you get above that, every 20 points it gets a little bit better, all the way up to around 780, and then it's kind of gravy after that. Next, loan to value. So this is the amount of money that you're putting down. So people will put down 5%, others will put down 20%. Some people will put down even more. So the more you put down is the less risk for the bank. So at that point in time, they lower the rate because it's less risk to them. Next, the type of property. So meaning single family. This is just a regular old home. Units, which would be duplex, threeplex, fourplex. Next, condo or even a manufactured home could come with much higher rates than a regular single family property. Next, the loan program. So loan program, you have your big three. You have conventional, you have FHA and VA right there. And then you also have this one down at the end called non-QM. That's if for some reason you can't prove your income and we got to use bank statements and all kinds of stuff. Those rates are way higher than they are if you were just to do a conventional or one of those three. Next, the term. So 30-year, 20-year, 15-year, 10-year, all those come with different rate structures. And then even fixed versus adjustable. I haven't done an adjustable rate in a long time because you don't really need to in this market with rates being as low as they are. But the big thing would be the 30 and the 15-year. There could be a good 0.5% less in just moving it to a 15-year. So make sure when you're seeing that billboard when you're driving down the freeway that you know what you're looking at and you're not just saying, hey, well, I saw it when I was driving down the road that it's 2.5% today. So next, occupancy. So there would be owner occupied, that means you're going to live in it. Investment property, that means you're going to rent it. And then second home, that means you got a place in Tahoe and you're going to go visit it, right? But nobody else is going to be there. So occupancy comes with a big discount in interest rate. So if you're buying an owner occupied, it's less risk for the bank than an investment property. With an investment property or second home, they're also going to require you to put more money down to lessen their risk, and to also will also get you a lower interest rate by putting more and more down on those properties. Next would be timing. So timing is everything in this market. Every day, all day long, interest rates change. They're all based on the long-term bond market. At that point in time, what that means is, let's say today I quote you an interest rate. Tomorrow it may be completely different, and even a month ago, when we saw rates go up 0.5% literally in 2 days. So be super careful about what you previously quoted and versus what you have right now. And if you are buying a new home, for instance, that house may take you 6 months to build. So make sure that the loan officer that you're working with will approve you a full % higher, and make sure you're comfortable with that payment, so that in case rates do go up in that 6 months while the house is being built, that you're able to absorb that payment and know what you're getting into. And then finally, I get this question a lot: what are my points? How much are points? What are points? Well, points are a percentage of the loan amount that it takes to buy down the rate. So for instance, in order to lower your rate, let's say a 0.5%, it may cost you a full % in order to lower it. So for instance, on a $400,000 loan amount, it may cost you $4,000 to lower your rate, let's say a 0.5%. So we'll do some calculations together, and then I'll show you, hey, is it worth you to pay the points on this if you're going to be there a really long time? Or are you better off just keeping that money in your pocket? Anyway, I'm Chris Kennedy with Reliant Lending. My phone number is 916-794-0777. If you have any questions about interest rates or home loans or first-time home buyers, give me a call, 916-794-0777. Thank you.